You know that one friend who always orders the same meal at every restaurant? Safe, predictable, solid choice, but they never really taste what else is on the menu. That, in a nutshell, is SCHD. It's the ETF equivalent of grilled chicken and rice. Healthy, reliable. Investors swear by it. But just like sticking to one meal forever, if you only rely on SCHD, you might be leaving flavor and wealth off the table. CHD is phenomenal at what it does. You get big, established companies that can handle recessions, inflation, global chaos. Every quarter, SCHD quietly hands you a paycheck in the form of dividends, like clockwork. Consistency isn't the same as acceleration. SCHD will get you there, but it might take longer than you'd like. It's like driving a sturdy sedan on cruise control while others are flying by in electric sports cars. Picture two investors, Peter and Josh. Peter's the definition of steady, loves safety, and sticks with what's tried and true. When tech stocks surged in the late 90s, everyone was chasing them, but not Peter. He focused on dividends and solid cash flow. When the bubble burst, Peter barely blinked. His portfolio stayed strong while others burned. On paper, it looked like he won. Then there's Josh. He learned from the crash. Instead of fearing risk, he studied the market dynamics that led to it. Josh realized Peter's portfolio was safe but static. He mixed stability with possibility, adding growth sectors and international markets. Fast forward a couple of decades, and the difference between them is night and day. Peter's comfortable, yes, but Josh is financially free. He took calculated risks, not reckless ones, and he let compounding work on both safety and growth. That's the hidden danger of relying only on SCHD. It's not that you'll lose, it's that you'll miss out. Sometimes the biggest risk isn't losing, it's being so cautious that you miss the opportunities that change everything. Now, don't get it twisted. SCHD is elite at what it does, but it has a clear mission: steady income from reliable American companies. That's it. On the surface, SCHD looks diversified. 100 stocks. Sounds solid, right? But zoom in and you'll see the illusion. Nearly half of the fund sits in just 10 companies. That's like calling your playlist diverse because it has 10 Taylor Swift songs and 1 Ed Sheeran track. Then your entire portfolio moves like it's dragging an anchor. Opportunity cost is a blind spot. SCHD focuses on mature companies with predictable profits, great for income, but seldom game changers. You won't find early-stage disruptors or electric vehicle pioneers here. SCHD is defense, stable, but not transformative. CHD is 100% American. Sounds patriotic, but limiting. Relying solely on one economy can hinder your retirement plan and diversification. Imagine eating at the same restaurant every day. You miss out on diverse global opportunities when only holding SCHD. CHD is amazing, but incomplete. It's the backbone for investments. You need growth, global reach, and smart risk to build real wealth. Consider 2 more ETFs to complement SCHD. They can transform your plan from slow and steady to steady but accelerating. VT is your gateway to the world. Think of it as your passport, investing in major economies globally. While SCHD keeps you locked into the US, VT opens doors to companies in Europe, Asia, South America, all driving growth. The world doesn't move in sync. When the US slows, other regions pick up, providing opportunities. In the 2000s, the US was sluggish, while emerging markets like China and India thrived. A bit of international exposure made a difference. VT is a one-stop shop for global participation, allowing you to invest without the hassle of picking individual stocks. Global diversification smooths the ride. Different markets peak and fall at different times, reducing volatility. Building a portfolio is like orchestrating music. Even if one note goes wrong, the overall harmony remains intact. Now, global diversification alone isn't going to make you rich. It's crucial, but it's not enough. Because while VT gives you balance, you still need something that adds power. And that's where QQQ enters the scene. If VT is your passport, QQQ is your time machine. It doesn't just invest in what's working today, it invests in what's next. QQQ tracks the NASDAQ 100, home to the biggest innovators on the planet. We're talking about Apple, Microsoft, Nvidia, Amazon, Meta, the companies that redefine entire industries before breakfast. Think of SCHD as your stable, income-producing uncle. Steady, practical, loves his spreadsheets. VT is your worldly cousin. And QQQ, that's your wild younger sibling who just sold an app and moved to Bali. But when you step back and look at the track record over the last decade, it's hard to ignore. While SCHD put up solid returns, QQQ was sprinting. CHD companies are mature. They make money today. QQQ companies are building the future and creating what's next. Whether it's AI, semiconductors, cloud computing, or clean energy, this is where revolutions start. If you're in your 20s or 30s, your money should be working hardest in QQQ. Volatility isn't your enemy. It's your training ground. Markets reward patience, not perfection. QQQ will test your nerves, but zoom out to see exponential growth. Together, SCHD, VT, and QQQ form a complete ecosystem. Stable income, global reach, and raw innovation. Imagine your portfolio as a team. SCHD is defense, VT is midfield, and QQQ is your striker. If you're younger, say 20s or early 30s, you're sitting on the one asset older investors would kill for: time. Your portfolio should lean heavily toward growth. QQQ takes the lead, SCHD adds stability, and VT connects you to the world. As you move into your 40s, earning more and juggling responsibilities, stability becomes your co-pilot. Shift gears with a bigger share of SCHD. Those quarterly dividends from SCHD start feeling like comfort. VT keeps you global and balanced, while QQQ still provides future growth. By your 50s or beyond, it's about preserving comfort. SCHD becomes your anchor. It pays you while you sleep. VT remains your safety net for global exposure, ensuring you're not vulnerable to one economy's slowdown. QQQ is the spice for flavor and growth. What's beautiful about this trio is how naturally they balance each other. When one underperforms, another usually shines. When QQQ cools off, SCHD's dividends cushion the fall. When the US stumbles, VT's global exposure steadies the ship. Here's where a lot of investors mess up. They think diversification means buy everything. Real diversification is intentional. It's about choosing assets that complement, not duplicate, each other. If you were investing $1,000 a month into just SCHD for 30 years, you'd end up with roughly $2 million. Now let's say you added QQQ and VT. Splitting that same $1,000 across all three could push it north of $3 million. It's simple. You don't have to chase stocks or rely on hype. Just automate your contributions, stay consistent, and let time do the work. Portfolios fail more from emotion than math. SCHD keeps you calm. Its stability helps you stay invested during rough markets. VT helps you stay rational when the US underperforms. You know you're covered globally. QQQ inspires you during big growth years. With these three, you're not just building a portfolio. You're building peace of mind. It allows you to check investments calmly. Imagine your financial journey as a map. SCHD is your home base that feeds you dividends and protects you from volatility. VT is your plane ticket. It opens doors to global opportunities, ensuring you don't miss out on significant growth. And QQQ? That's your rocket. It breaks gravity. It pushes your wealth curve upward faster than logic would predict. When these three work together, you're not just diversifying, you're compounding intelligently across time, geography, and innovation. Too many people get stuck in one lane, convinced that comfort equals safety. But comfort without progress is just slow motion. Let's be honest. Most people's investing strategy is built on fear. Fear of losing money, fear of volatility, fear of the unknown. Because here's the thing, economies shift, technologies reinvent themselves, new players rise, old ones fade. SCHD gives you the roots, VT spreads your branches, QQQ grows your fruit. That's a living, breathing wealth ecosystem. SCHD provides comfort and income when shifting from growth to preservation. You're investing across eras, not betting on one. Imagine being in your 40s with dividends from SCHD covering your utility bill, while your VT holdings grow and QQQ shares soar. Start young. Time is the multiplier. A $500 monthly investment split between SCHD, VT, and QQQ could lead to 7 figures by retirement. This approach isn't glamorous or quick. You won't see 50% gains in a week, but you minimize risks by not chasing hype. It's about acceleration with direction to build wealth quietly and predictably, faster than most get-rich schemes. Peter thought he was winning because he never lost. But Josh understood that not losing and winning big are two different games. SCHD protects you from the downside, but VT and QQQ provide the upside that makes the journey worthwhile. Once you build that 3 ETF setup and stick with it, you'll probably worry less about the market. Recession? SCHD pays you while prices recover. US slowdown? VT connects you to global growth. Tech surge? QQQ takes you along for the ride. Think about retirement as freedom. Freedom to choose how you spend your time and who you spend it with. The best time to invest was yesterday. The second best is right now. Delaying means losing compounding growth. You don't need to predict the next crash. You just need to be in the market with a strategy designed for the long game. SCHD gives you cash flow. VT offers global safety. QQQ provides innovation upside. Together, they give you freedom on your own timeline. When people argue about which ETF is the best, remember, there isn't one. It depends on your goals and risk tolerance. Pair SCHD with VT and QQQ, and you have a resilient yet dynamic portfolio. You're propelling your wealth. When your dividends, growth, and global exposure align, you'll realize your slow and steady plan was efficient, not slow. You built momentum without gambling. You bought time without sacrificing sleep. You created a system that worked. That's how you retire comfortably and confidently, hitting your goals years earlier than expected. SCHD is phenomenal, but it's just part of the picture. Add VT and QQQ for a full strategy. Start small, be consistent, automate contributions, and let compounding do the lifting. Building wealth isn't about one thing forever, but knowing when to evolve and accelerate.